Hello and welcome back to Investment Vitals. Last week, I had made a video covering the highlights or the summary of the proposed plan in the ongoing FTX claim case. As discussed in that video, I'll be covering details of the important sections of this document in separate segments so that viewers can choose to view the segment that is most relevant for them. Today, I will be covering the most critical part of this document, which is the draft plan of organization, which is the term sheet. This term sheet would cover the most important aspects of how the money would be distributed as per the plan. If you find this video useful, do hit the like button and share it with your friends and family so that most people can benefit out of it. Also hit the subscribe button and the notification bell to stay informed in the latest development, some of which might be very important for our purpose. Also, if you have any suggestions, inputs or comments, please write in the comment section and I'll try to get back to you as soon as possible. Before I move ahead, I'm neither a legal nor a financial advisor. So nothing contained in this video or in my channel is either legal or financial advice. Now with that out of the way, let me move into details of the proposed term sheet of the plan here. I will be skipping through most of the document, but I'll be covering only the highlights thereof. To start off with the background, the debtors, which is FTX Exchange and its group companies, had filed the initial draft plan on July 31st, 2023. At that point of time, FTX case raised many unresolved factual questions and legal issues that affected many stakeholders. The idea here is that at that point of time, many creditors, which is people who had a claim on FTX, had divergent view of how would this amount be shared. The current proposal highlights the plan of distribution among different stakeholders, which includes customers, vendors, government taxes, so on and so forth. This term sheet updates the initial draft plan for settlement of the pending proceedings, which included in the plan support document. Couple of important aspects. First of all, the valuation of the claims will be in US dollars. This we had discussed in an earlier video in which we had discussed that based on the judgments that have been pronounced in the ongoing litigation, it was fairly clear that the amount will be in US dollars. If you have missed that video, you can click on the link appearing at the top right of your screen right now to follow. The second important part is the resolution of disputes regarding ownership of the digital assets held on FTX.com and FTX Exchange will be based on the applicable terms and of the service and trust doctrine. Third is the identification of the three primary recovery pools corresponding to segregated assets attributable to FTX.com customers, segregated assets attributable to FTX US customers, and other assets that the debtors contained are not clearly attributable to FTX.com or FTX US exchanges. What this section essentially means is that that for the purpose of this claim, three pools have been identified as separate. The first pool are those assets that can clearly be identified or can be associated with FTX.com. Now, as we have discussed in one of the previous videos, FTX had various exchanges which included FTX.us, which was essentially for customers staying in US. There was also FTX.com, primarily comprising of international customers of FTX. There was also FTX Japan and FTX Europe, so on and so forth. However, FTX Japan and Europe are not part of this document, which implies that they are probably getting processed outside in a separate legal proceeding. For the purpose of this document, assets that were clearly identifiable with FTX.com or the international customers has been segregated separately. Similarly, assets that could have been easily identifiable with FTX US have been segregated as a second pool, and the third pool has been created of assets that are neither directly linkable with FTX.com assets or neither with FTX US. So this is how they have segregated into three primary pools. Further, the document talks about the recognition of special shortfall claims by the FTX.com and FTX US exchanges for the benefit of the customers against the pool of general asset to compensate the exchange for the unauthorized borrowing and or misappropriation of the assets held on the exchange. What this speaks about is, as customers who had placed our money, let's presume that I had Bitcoin and US dollars on the exchange. It was my money, it should not have been misappropriated. However, as most of you would know, FTX management had commingled funds, which implies that funds that belong to customers was utilized for purposes that were not directly linked to us and hence was essentially taken out of our kitty. This has been recognized, and the, the shortfall, the amount that was lost from our kitty, from our money, needs to be compensated for. So what this document talks about is that the shortfall after recovering those assets that are attributable to FTX.com and FTX US, after taking those into account, still there is a shortfall to the tune of around $8.7 billion for FTX.com and a much smaller amount kitty for FTX US. However, to make over for the shortfall, we will have a claim on the general pool. That is the third pool that we discussed about some time back. The fifth important aspect of the document talks about cancellation of intercompany claims, which is claims between different companies have been cancelled out. This will be discussed in the later part, but is not very relevant for the current video, so I will not go into too much of details in this. Furthermore, the subordination of certain claims has been recognized, which implies that it has been recognized that some of the claimants will have a preferential treatment. Preferential treatment would be a wrong usage because it's used in the document in a different context also. But essentially, some of the people like you and me will have a priority over others. The good part about this document is that customers of FTX.com as well as FTX US have been given a priority over many others like government tax claim and unsecured creditors. That's a good thing for all of us. The seventh important aspect of the document is subordination and extinguishment of FTT claims, because it is believed that FTT claim is similar to equity in characteristic, and therefore the document proposes to extinguish, which is extinguishment of all other equity interests, which what it essentially implies for the holders of FTT token, either on FTX exchange, FTX US exchange or group exchange, or even outside. If a person held an FTT token, let's presume on Binance, that those tokens are proposed to be extinguished, which means the value would be made zero. That is what the plan currently proposes. If you are one of the FTT holders, I can feel for you, and I'm extremely sorry for potential loss that you might be facing. I know all the people watching this video have lost large sum of money in FTX, and we can obviously associate with you. However, as currently it is proposed that the value of FTT will be taken as zero. The last important part of this document talks about liquidation of estate of debtors and the payment of distribution to customers and creditors in cash. This is subject to voluntary election that may be available to customers in connection with the reboot of offshore exchange. What this implies is that there is a proposal of restarting FTX exchange for customers who are outside of US. So within US, this exchange would not be rebooted. There's a plan to restart the exchange. This I will be covering in greater details in a separate video. However, in one of the other similar bankruptcy cases, which was Celsius, customers were given a choice to take some degree of equity shares or stakeholdings in a newly started company or in a new company, or so the customers therein had a choice of taking more amount of money or equal amount of money and shares as was proposed, or more amount of equity shares under an election option. So this voluntary election option is likely to be offered to FTX customers also. So please stay tuned to this channel, because whenever this election option comes across, we should be ready and we should know how to proceed with the voting. Now I'll move into the details of this further details. It talks about modified substantial consolidation. Under the plan, the estates of all debtors other than the separate subsidiaries will be substantially consolidated. I will not read through the balance of the document, but what it implies is various assets that were owned by these exchanges will be taken together, consolidated for the part of identification of assets that can be liquidated for or sold for repaying to the customers who had their money with FTX exchange. Furthermore, there's separate subsidiaries discussion in which the document talks about the debtors may identify certain subsidiaries that are solvent and historically separate. It further talks about that these separate subsidiaries will be excluded from the substantial consolidation for the purpose of the plan, and claims against separate subsidiary will be separately classified and paid in full in cash or otherwise left unimpaired. What this talks about is that there are certain subsidiaries of FTX that are not bankrupt or not insolvent. These subsidiaries are functioning and hence will not be taken as a part of the consolidation exercise that I spoke about some time back. However, this might not be of much relevance for this video, so I'll not be delving much into greater details on this. Uh, Within this subsection, it talks about dismissed and excluded subsidiary. It also talks about debtors may identify certain subsidiaries. Which debtors for the context of this video, debtors implies FTX exchange or its group entities against whom we are proceeding legally as customers or claimants. Now, it talks about the debtors may identify certain subsidiaries that will be excluded from the plan and whose Chapter 11 cases may be dismissed prior to, in connection with, or after confirmation of the plan or resolved separately. This essentially talks about certain subsidiaries of FTX which will be excluded from this proceeding. It is presumable that some of these might have a separate case going on. However, there is a provision for excluding some of the subsidiaries from this particular proceeding. Now, this brings us to the most important section for most viewers here. The claims, different claimants have been classified into different classes. The first three classes pertain to mostly the secured claims who are proposed to be paid in full. Now, this would mostly include, I'll give an example. For example, the secured claim 2, class 2 is all secured claimants, which could be, say, a bank. Let's presume that a bank had given a loan against cars of the company. So those kind of secured claimants who have a particular asset that was specifically designated to them will be given a priority. This is obviously understandable because those people already have a provision or legal agreement that would support them. I would not be delving into details because for most people watching this video, class 1, 2 and 3 would not be of much significance. The most important section for ordinary people like you and me, people who were customers of FTX, would be class 4 onwards. Class 4, as I said some time back, for the purpose of allocation, you customers of FTX.com, which is international customers, and FTX US will be treated separately. Customers of FTX.com have been treated as a part of class 4A. I'll read through the document and I'll provide summary wherever required. All customers of FTX.com will constitute a single class regardless of the type of token or product held and will have a claim in an amount equal to US dollar value of their customer entitlement on FTX.com at the time of petition, to the extent allowed other than in respect of any NFT or FTT holdings. Now, balance portion is not very pertinent. So what this particular segmentation into class 4A implies is that all customers of FTX.com will be treated equal irrespective of the type of token they held or the product they had taken. What it implies is that irrespective of holding of Bitcoin, Ethereum or any other asset that you might have had, the valuation in terms of US dollars will be assigned and will be taken, and then all irrespective of what token you held, you will be treated based on the valuation in US dollar terms as per the valuation that has been obtained. This also talks about that NFT, that is non-fungible tokens, or FTT holdings that you have had would not be considered as a part of the US dollar value. The treatment thereof I'll be talking about separately. Similar to this, the US customers, which is FTX.US customers, will be treated as one category, and similar condition has been mentioned for them also. It says that all customers of FTX US will constitute a single class regardless of the type of token or product held, and will have a claim equivalent in amount of US dollar value similar to FTX.com. Irrespective of what the holdings of FTX US customers was, it will be taken at equal value in terms of the US value. However, again, the treatment of NFT for them is also similar. That I'll be talking separately. However, as you would have noted, there is no mention of FTT token under class 4B. That is because US customers or customers of FTX US did not have FTT holdings because FTT was not to be issued. FTT token was not to be issued within US. So therefore, practically for all practical purposes, in terms of identification of the claim, or the class 4B. Class 4B is very similar to identification parameters as per class 4A. Class 4C, which is attributable to NFT entitlements. People who are holders of the non-fungible tokens at the time of petition have been treated separately. What the document currently talks about is that NFTs will be returned in kind to applicable customers unless NFT is missing or was destroyed, in which case, depending on the nature of the claimant, the applicable claimant will have a class 4A claim if they were FTX.com customer, or a class 4B claim if they were an FTX US customer, or a class 5 claim if applicable for petition at the time of NFT. What this essentially talks about, if you were holding NFTs on ftx.com or .us exchanges, you will be given your NFT back as it is, unless the NFT is missing or destroyed. If the NFT has been missing or destroyed, the valuation of those NFT will be taken as would have been taken for an valuation of your Bitcoin or any other holding. So most customers who are holding NFTs will actually get their full NFT back. Those whose NFTs have been lost, the valuation of that will be taken as a part of your claim. The rest of the claim will be class 5 onwards is not very pertinent for viewers of this channel, so I'll only be quickly move through those. Class 5 customers are general unsecured customers, which it talks about claims of customers or creditors which are not otherwise classified, that is not which are neither class 1, 2, 3 or 4 A, B or C. They will be treated as class 5 customers. Not very relevant for most viewers of this video. However, if it is pertinent for you, please do drop a comment and I'll get back to you on with the details as might be required. There are certain other important sections in this document. One of them is convenience classes. I'll read through the document, the text first, and then I'll come back to the description thereof. It talks about holders of the claim in convenience class will receive a one-time distribution in cash at a fixed amount to be determined in the plan. Such amount will be different for each convenience class based on the net present value of projected recoveries for the analogous class 4A, 4B, and 5 at the time of the plan. Well, I'll get into details a little bit. Now, convenience class has not been defined appropriately in the document as of now, but going by the context of history, in the Celsius claim case, customers who had a claim amount of $5,000 or less were given a priority treatment, essentially meaning that they were paid out faster and without having, it was much more easy, made much more easier for them. Again, this is important, and most claimants, most customers of FTX would likely fall under this category, at least in terms of the number of customers. I understand that this will be the most important topic for most people watching this video, and hence I'll be making a separate video for customer claim classes. Then there's a discussion about intercompany claims and interest. Not of much interest for most people. This will be class 7 and class 8 respectively. It talks about all intercompany claims and interest other than that those set out in the plan will be compromised and eliminated in the plan. What this implies is most intercompany claims between different companies will be eliminated, which means their value will be made zero. Again, not very relevant for people of this video, but this would increase the amount that you and me might get as a part of the settlement. The third party subordination claim, which is class 9. Class 9 consists of claim for regulatory fines, penalties, US federal and state income or employment taxes, similar foreign taxes, any other claim that has been subordinated on the basis of structural subordination. What this implies is that for the purpose of claims being payable to you and me, the regulatory fines, that is fined by the government or regulators, or the US government taxes, state taxes, or any other country's taxes will be treated as subordinated, which means lower in priority vis-a-vis you or mine. So it is good for us that we will be paid before the government taxes are paid, and this is a good move. Ordinarily speaking, taxes generally get a sovereign claim, or which is also called crown debt in some cases, are generally given a priority, but in this particular case, this has been kept lower in priority to customer claims, and that's a very good news for most of us. Then comes class number 10, which is subordinated claims. It talks about class 10 consists of claims held by any control persons which shall be equitably subordinated pursuant to the plan as permitted under applicable laws. All class 10 claims will be cancelled and extinguished as of the effective date of the plan, and holders will not receive any distribution. What this talks about is control person would essentially be people who had control on management, like Sam Bankman-Fried or the CEO. Essentially management people or people who had significant amount of control on the entity. Logically speaking, their claims would not be honored. So Sam Bankman-Fried, irrespective of the money he would have kept in FTX, would not get any money. Well, I'm not a legal expert, nobody to comment on that, but this would again be favorable to us. As I discussed, class 11 to 14 would comprise of FTT token and equity classes. What this talks about is class 11, 12, and 13 and 14 consists of claims by holders of FTT, whether or not held on any FTX exchange, preferred stocks, equity investments in the debtors, that is FTX, and the related claims. All essentially what this implies is people who are holding FTT token either on FTX or any other exchange. Second, people who had preferred stocks or equity stocks, essentially basically shareholders or people who had equity interest or shareholding interest in FTX or its subsidiaries. Their claims, I mean, I'll continue reading further. Their claims and interest will be cancelled and extinguished. Implies that their claim will not be honored as under the current proposed plan, which implies that people who are holding equity interest or FTT token, their value will be zero. If you are an FTT token holder, uh, my heartfelt sorry for you guys. The next important part is valuation, which is where a customer entitlement or other claim reflects an underlying digital asset other than an NFT. Digital assets implies cryptocurrencies, etc. See Bitcoin. It says the claim will be liquidated in USD, that is US dollars, based on the fair market value at the time of petition. Or further, it reads the fair market value will be determined based on the matrix, that is valuation matrix, attached to an omnibus estimation motion filed by the debtors in advance of the plan solicitation and prepared with inputs from independent experts engaged by the debtor for the purpose. What this basically talks about is whatever tokens you and me held on the exchange, accepting NFT, that is, or NFT and FTT token, all other assets that we held, say Bitcoin, Ethereum, the valuation of that will be driven through a valuation matrix and they will be then paid out in dollar terms. As I discussed some time back, this is something that we had estimated much earlier than this document came out. Couple of other things. There is a discussion on preference shares. Now, this is not a priority preference. That's why I said preference has to be a different terminology. Now, preference share in this context implies people who had withdrawn money from the exchange immediately prior to the filing of bankruptcy. For the purpose of immediately prior to that, I said it talks about people who had withdrawn money from the from FTX or FTX.com or FTX US between 12:01 a.m. on November 2nd, 22 and till 10th of 10 a.m. on 11th November 2022, essentially implying people who had withdrawn money between 2nd November and 11th November, as long as their amount of withdrawal, net withdrawal, money paid into the exchange, money taken out, the difference of that two, the difference of money taken out minus the money paid into the exchange, as long as that amount net basis is more than 250,000 US dollars, they will have to pay back, or a clawback clause of 15% is currently proposed for those who accept this document. For those who do not accept the document, it is likely that the debtors, FTX exchange, might pursue you for the full amount. That is not unlikely. I will be making a separate video on customer preference settlement. However, given the size, which is $250,000 and more, I am certain that most people watching this video would remain unaffected by this. Just to calm nerves, if you are a small customer, not with balance more than two, with the transaction amounts less than 250,000 US dollars, you don't have to worry about this. They would not be coming for you. So retail clawback for small customers has not been envisaged in the document. That is a very positive thing for most people like you and me. Control function that I said some time back in terms of people who are holding control implies Samuel Bankman-Fried, SBF, Ziao, Nishad, Caroline, or any person with familial relationship with these individuals, essentially people who control FTX. That is not very relevant for the discussion right now. Now, what does this imply? I'll move to the portion where sorry, again, before I move to that, now comes the recovery pool. How will these classes of people be treated? As I said some time back, this particular clause would talk about the recovery pools. It talks about .com customer pool. Just for clarity, one more time, .com customer implies customers of FTX.com, or which you can call as international customers. Now it says that each holder of a .com customer entitlement, international customers, will receive a pro rata share, proportionate share, from a pool of assets associated with FTX.com exchange, net of distribution to the .com customer convenience class and allocatable share. What this implies is that entire asset that is directly relatable or directly linkable to FTX.com after paying the convenience class, essentially meaning after the small shareholders have been paid, which implies that probably smaller shareholders will be paid a higher amount than the larger shareholder, and that is a very equitable way of going about it, because generally speaking, a small shareholder would be a small investor for whom a small amount would matter more. That is what the hypothesis of convenience class implies. So the convenience class, that is small depositors, which most likely would be depositors with value of, in terms of Celsius, it was 5,000 US dollars or less. If your claim is small, then then you will be getting a higher amount than other customers of both the exchanges. What basically it implies is that after the entire money that can be recognizable with ftx.com, after paying off the small investors, small customers, the balance amount that remains will be equally divided among the other claimants. Now, in terms of FTX pool that will be included for this would be all fiat, essentially all currencies that were held, all digital assets in the AWS wallet. All digital assets essentially implies all cryptocurrencies like Bitcoin, Ethereum, you name it. Any hack recoveries, as we know that there was a hack on FTX exchange, so any amount that is recovered on from those hackers will be included in this. All recoveries of preference paid customers, uh, essentially people who are withdrawn from the exchange, net withdrawal of more than 250,000 and or more will be pursued for payment of 15% if they agree to the document, or probably even more if they don't agree. So whatever recoveries come from that will be taken as a part of payment to for our purposes. And all net recoveries from the Bahamian subsidiary, essentially the subsidiary, as I said sometime back, the subsidiaries, most assets of the group companies will be consolidated for the purpose of distribution to the customers of ftx.com. All net proceeds from the sale, restart, creation or capitalization of offshore exchange. So as I said sometime back, there is a proposal to restart the exchange. I'll be making a separate video on this topic because it's of greater interest for a lot of people. As of now, there are three claimants, there are three parties that are getting engaged for this purpose, but nonetheless, any money that might come from that could be used for this purpose, or maybe equity shares in of that entity. Furthermore, the point G is a historical shortfall claim against general pool. So after taking this, after all these above A to F have been taken care of and distributed proportionately to all the ftx.com customers, the remaining amount that we are short will be claimed against the general pool. This I'll be talking about in a later part of the video, as how would this claim on general pool be done. A similar amount of distribution is also being spoken about for the FTX US customers, because it is very similar to the distribution among FTX.com customers. I'll not be going into details in this particular under this particular segment here on. Next more important part is the general pool. As I said, both FTX.com customers and FTX US customers have a shortfall. This was discussed in my summary video. If you have not watched it, I'll be placing a link at top of the screen, on appearing on the right side of your screen right now. You can click on that. The amount of shortfall is around, I don't recall the exact number, but it's around $8.7 billion for FTX.com, and in some certain million amounts for the FTX US customers. FTX.com have a bigger shortfall. So the shortfall amount for that particular shortfall, both ftx.com and FTX US customers will have a claim on the rest of the assets of the two exchanges, which are not directly identifiable to the exchange. The distribution thereof, that's called the general pool. So I'll just read through one. The general pool will include all properties of the estate that is not in the .com customer pool, the US customer pool, or property of a separate subsidiary. What it implies is any asset that is not directly in ftx.com or FTX US will be essentially pooled as a general pool. How the claim on a general pool will work out is as follows. This is going by what is called a water flow mechanism. Water flow mechanism implies who first claimant, second claimant, or claim distribution among different people in a hierarchical order, in a priority order. So what it says is proceeds from the general pool will be allocated in the following manner. First, to pay administrative expenses and secured and priority claim allocable to general pool. So any person who has a secured expense or an administrative expense will be paid first. Second, to pay general convenience claim as set out in the plan. As we spoke about, small retail depositors will be given a preference. So money will from the general pool will second be allocated to the convenience class customers. Third, with respect to 66% of the amount next available for distribution from general pool to pay to .com exchange shortfall and US exchange shortfall on a pro rata basis, which is after the part A, which spoke about the administrative and secured expense having paid off, and after the convenience class has been paid off, from the remaining amount, 66% will be paid on a pro rata, which is proportionate basis to FTX.com customers and FTX US customers. The rest is claim 4 is for the remaining amount will be paid to general pool to all unsecured claims, is not very relevant for most people watching this video. And fifth is also to pay to subordinate claim. This is also not relevant for most people watching this video. However, if you fall in section 4 or 5, please do drop in a comment and I'll get back to you with greater details. Now, there's also, as I discussed some time back, there's point number 5 here talks about implementation. It talks about offshore exchange. The property of the FTX of the debtors, which is FTX group, associated with the ownership and operation of FTX.com, will be gathered and marketed in a competitive process for the benefit of the .com customer pool. As part of this competitive process, the debtors, which is FTX group, may decide to establish in collaboration with a third-party investor a new company in jurisdiction outside of the United States to operate a rebooted platform exchange not available to US customers. Basically, this implies that the FTX.com platform would be tried to be rebooted. As of now, the news talks about that there were 3 parties with whom discussion is going around. This we had discussed a long time back, even before this document came out. In one of the other videos, I'll place a link on top of the screen for your reference if you want to watch this. I'll also be covering this in a separate video in greater detail because this might be of relevance for most of us. Further, venture investments, again I will not read through the details. It's essentially this we had also covered in an earlier video before this document was released. FTX had made some very important investments like Anthropic. Some of them have got significant value, like for example Anthropic has received funding of, if I'm not wrong, around $8 billion from Amazon and Google. I have to verify those amounts, but Anthropic, for example, is now very richly valued. I feel the latest valuation is upwards of $20 billion. Similar investments will be there that are illiquid. What this particular clause talks about is that the purpose of FTX Ventures will be to make cash distribution to the wind-down estate on a time horizon to be determined based on the nature of its investment. Because some of these investments do not have a market value right now. For example, Anthropic is not listed, so it might not be easy sellable at the time of payment to you and me. So the idea there that is currently being mooted under the document is to get cash distribution from these investments over a period of time that will be determined. So a time plan will be given within which cash flows from these investments will be recovered. It could be in form of dividends coming out of this companies or gradual sale of investments that were made in this company. This will emerge as clarity as things go forward. However, it also says that FTX Ventures will not issue shares to creditors directly. As I said some time back, there's a plan to reboot the exchange FTX.com for international customers. We as customers might get an option of voting for some equity shares on that exchange. However, we will not have the option of taking equity shares in the holding company that will hold the important investments of FTX.com. So when it comes to election, we can be very certain, reasonably sure that investments like Anthropic will not be housed in the company in which we get shares. At least that's what is currently being proposed. Distribution other than any non-cash consideration that may be distributed in connection with creation of offshore exchange and NFT will be made in cash in US dollars. This we had also covered in a video much earlier before this document was released. What this essentially talks about is that we will not be paid in Bitcoin, Ethereum or any other cryptocurrency, but in US dollars based on the valuation that I spoke some time back. Further, NFT, for example, will also be paid out in kind. So you'll get your NFT back as it is, unless it is destroyed, in which case you'll be paid value equivalent thereof. Further, distribution will not be made on claims held by recipient of a preference or other avoidable transfers until any related avoidable claims has been resolved or settled. This is fairly standard, not pertinent to most of us. Potential early liquidity alternatives. Debtors also intend to explore alternatives to provide creditors a voluntary election to receive early cash distribution, with the scope and source of funding for such election to be determined in connection with the financial plan. What the document currently envisages is that some of us might be given a choice to opt for an early payment, which implies that with a small haircut or a sacrifice, we might be able to get our money back. This is an important section for many of us, because some people would rather take a haircut or a bigger, higher amount of loss to get money upfront, because based on the 4 year cycle, we some of you might have an opinion that you can probably make more money, or if you get the money on cash upfront. Well, it's a choice that's up to you. I'll be covering this also in greater details in a later video. However, this is a very positive development for those people who might be cash crunched, or people who are looking to get money early. There will be an option for those, and you might have to vote for it. So please stay tuned to this channel, click the subscribe button and hit the notification bell, so that whenever this election option comes, either for getting payment, early payment option, and also for getting shares on the newly proposed entity, you know how to vote for it and when to vote for it. Do not miss on this opportunity when it comes across. Again, not financial advice, but in my opinion, I would not miss out on such election options. With that, some of you might be wondering, apart from the location of the amount among the various classes that we spoke about, what is the other implication? Well, in terms of implication, here is the chart that talks about the voting rights, etc. Class 1, 2, and 3, people who are giving preference in terms of people who are being paid in full, they would not have an option to vote. They will have no voting right. Status unimpaired is something that I will not bother about too much, but essentially speaking, class 1, 2, and 3 will not have a voting option. Very important that class 4A, which is essentially FTX.com customers, class 4B, which is essentially FTX US customers, class 4C, which is people who held NFTs on FTX.com or FTX US. These people will be entitled to vote. Similarly, the others, most of us would not be falling under class 5, 6A, 6B, 6C, etc. But even class 5, 6A, 6B, and 6C, definition of which is given on the second column of this table, will have the entitlement to vote. So be ready to, when the option to vote comes across, stay tuned to this channel. The timeline, most likely based on the other video that I made some time back. If you missed the important timelines video, click on the link appearing at the top of the screen. Based on the discussion in that video, it is likely that we'll be required to vote between March and June 2024. However, stay tuned to this channel. If there is any development, I'll be sure to keep you posted. With that, that brings me to end of this. Most things that I want to cover in terms of the important parts of the term sheet. Term sheet is one of the most important document in this proposed plan, and I felt it was very important to cover. I know this video has been long, but it is indeed very important document. So apologies if I taken too much of the time here. I'll be making separate videos on the convenience class, preference shares, and similar topics. Stay tuned. If you find this video useful, hit the like button, subscribe to the channel, hit the notification bell to stay posted of the latest development in the case. If you find this video also useful, please share and subscribe with other people who might be waiting for clarity just like you and me were. And if you have any inputs, comments, or suggestions or questions, do mention them in the comment section, and I'll try to get back to you as soon as possible. Thank you for bearing with me for such a long time. See you soon. Bye bye.